Have you ever wondered how to invest your money in 2024? Well, investing, in its simplest form, is the act of allocating resources, especially money, with the expectation of generating an income or profit. You see, money is a tool that can be used to buy future money flows. So when we invest, we use our money to acquire things that offer the potential to pay back more money in the future. Investing is one of the best ways to grow your wealth over time. It's like planting a tree. You sow a seed, nurture it, and over time it grows and bears fruit. And the best part, there are various ways to invest, each with its own level of risk and potential return. From stocks and bonds to real estate and peer-to-peer lending, the opportunities are endless. Now that we understand what investing is, let's dive into the 3 specific ways to invest your money profitably in 2024. The first and perhaps most popular investment strategy is investing in stocks. Let's unpack that, shall we? When you buy stocks, you're essentially buying a small piece of a company. This can be likened to owning a slice of a large pizza. Your slice might be small, but it's a part of the bigger pie. Now, one of the reasons why investing in stocks is so appealing is the potential for high returns. If the company you've invested in does well, the value of your shares increases. This could lead to substantial profits when you sell your shares. For instance, if you had bought shares in a tech startup years before it became a household name, you'd be sitting on a gold mine today. However, it's not always sunshine and rainbows. There's also a significant risk involved. If the company's performance dips, the value of your shares could plummet. You could end up losing a large chunk, if not all, of your investment. Picture it like this. If that large pizza we talked about earlier starts shrinking, so does your slice. To navigate these waters successfully, you need to know how to buy stocks. This isn't just about clicking a few buttons on a trading platform. It's about understanding the company you're investing in. What does the company do? How does it make money? Who are its competitors? What are its growth prospects? These are just a few of the questions you should be able to answer. Research is key here. You'll need to dig into the company's financials, study market trends, and keep an eye on the news that might impact your investment. Remember, knowledge is power. The more you know, the better equipped you'll be to make informed decisions. Patience is also crucial. The stock market is not a get-rich-quick scheme. It's a platform for building wealth over time. You'll need to weather the market's ups and downs and resist the urge to sell at the first sign of trouble. Investing in stocks may be risky, but with careful research and patience, it can yield high returns. So, are you ready to take a slice of that pizza? The second investment strategy we'll discuss is real estate investing. The beauty of this strategy lies in its simplicity. You're essentially purchasing property with the expectation to earn a return either through rental income or the future resale of the property. Consider real estate as a tangible asset, something you can touch, feel, and even live in. This tangibility is one of the main advantages of investing in real estate. Unlike stocks or bonds, you're investing in bricks and mortar, in land and buildings. This tangible nature of real estate can provide a sense of security, knowing that your investment is something concrete, something that will always have intrinsic value. Think of it this way. When you invest in a rental property, you're essentially acquiring a business that generates income every month in the form of rent. This steady stream of income can be a great way to supplement your regular earnings, or even replace them entirely if you build up a substantial portfolio. Now, while this all sounds very appealing, there are a few things to be aware of. Real estate investing typically involves a substantial upfront cost. Buying property isn't cheap, and you'll likely need a significant amount of capital to get started. Plus, there are ongoing costs to consider, such as maintenance, insurance, and property taxes. The real estate market can also be subject to fluctuations. Prices can go up, but they can also go down. It's crucial to do your homework, understand the market you're investing in, and make sure you're not overpaying for a property. But don't let these potential hurdles scare you away. With careful planning, thorough research, and prudent financial management, you can mitigate these risks and set yourself up for success. Remember, The key to successful real estate investing is to treat it as a business. This means having a clear plan, staying disciplined, and being prepared to put in the work. Despite the initial costs, real estate can be a lucrative investment strategy if managed properly. So why not consider adding some bricks and mortar to your investment portfolio? It could be the solid foundation you need to build your wealth. The third investment strategy is peer-to-peer lending. This is a fascinating form of crowdfunding where you can finance loans that are then repaid with interest. It's like being a mini bank. You lend out your money and in return, you receive interest payments. The beauty of this strategy is its simplicity. You're basically connecting directly with borrowers, cutting out the traditional banking middleman. Now, the potential for high returns is certainly enticing. However, it's important to remember that along with the potential for high returns comes the risk of borrower default. That's the trade-off. But don't be too discouraged. There are platforms that provide safety nets in the form of provision funds, reducing your exposure to risk. So why is this form of investment gaining traction? It's the combination of simplicity, potential returns, and the thrill of directly impacting someone's life. Peer-to-peer lending is a simple and potentially lucrative investment strategy, but like all investments, it carries risk. Investing your money wisely in 2024 can set you on the path to financial freedom. Let's recap. We've covered 3 profitable investment strategies: stocks, real estate, and peer-to-peer lending. Each one offers its own unique opportunities, from riding the wave of market trends in stocks, to the tangible long-term growth prospects of real estate, to the rewarding direct relationships of peer-to-peer lending. However, remember that all investment strategies come with their own set of risks. It's crucial to understand these risks and the potential returns before diving in. Knowledge is your best defense against financial pitfalls. Don't simply follow the crowd. Do your own research, evaluate the pros and cons, and make informed decisions. In the end, the most successful investors are not those who take the biggest risks, but those who invest wisely based on their financial goals and risk tolerance. Remember, the best investment strategy is the one that aligns with your financial goals and risk tolerance. Happy investing!